She loaded the boat on Dow options in February of 2 years ago and has enjoyed the pandemic bull market. Sarah, the linkage here of those on board, Dow 35,000. We're going to readjust SPX up to 4,600. Dare I say SPX 5,000 as well. What is the linkage now of this great bull market to Washington?
Well, I think the expectation is that you're going to continue to see more spending come out of Washington, and that tends to be positive for equities. You also have an expectation that interest rates are going to stay low, also another positive for equities, and that we've got some ability to reopen global economies, although that does seem to be in question now with some of the variants that have come out, including the most recent one, but also if you get further variants, what happens then? So I think that the expectation in Washington is just that spending will continue and that hopefully business CapEx comes in and adds to that spending, and that is continued positive backdrop.
Sarah Hunt, as you well know, being in charge of people's equity money, our actuarial assumption is a train wreck. Our retirement plan back to 1974 is a published failure. Have we caught up with this great bull market? Can the senators and the representatives say that their constituents are ready for retirement, or is that still removed?
I think it's a difficult situation because those traditional relationships that I think you were referencing, the sort of how much you have in bonds versus how much you have in equities, was pretty much turned on its head from the financial crisis onward. The bull market in bonds has been fantastic if you were holding them, but where do they go now in terms of the pricing because rates are so low? And the question really is, if you're sitting now and you're starting to put money to work, you're feeling very much like, wow, the equity market has run a lot. Interest rates are very low, so I don't want to risk cash by putting it into bonds here. And at the same time, I may have some volatility going forward in the equity market. So I think it's a very difficult question. It's a hugely difficult question for for people in companies who are running pension plans globally, not just in the U.S.
Sarah, we're at another all-time high, as Tom says. Does this administration care? What differentiates is the fact that President Donald Trump, former president, would have been out on a million tweets already at this point of the day.
Well, I think it's very dangerous to associate yourself with the market's activity because it's fine when the market is going higher. It is not so easy when the market has some volatility and or corrects, which at some point we all expect it to, which is probably why it's not doing it right now. I think that it is, you can say that there are some things that are tied to it. I'm opening up innovation, I'm changing taxes, I'm doing something else, but I don't think you want to associate yourself so tightly.
Another thing that's getting a lot of attention in Washington, of course, is what is going on with these Chinese listings. It was Didi last week. It's ByteDance this week. You have a lot of senators coming out with some language saying that this is just reckless. What do you make of that relationship? Are bankers going to be left kind of holding the bag? They were supposed to make billions of dollars doing a lot of these deals of these private companies looking to the West to list.
Well, I mean, it was interesting because there was a story on the Bloomberg that actually codified this in terms of the number of dollars, and something like $6.5 billion since 2014. So that's a big number, but since 2014, that's 7 years. And if you look at the capital markets outside of China, it's not as impressive as it might be just in terms of, is this going to be a great area for them? I think people were looking at it as another avenue for growth. So in that sense, it does take away from it, but I'm not sure it is an issue for those companies, is an issue for the ones who are trying to take specific companies public. But I don't think that overall it's as much of a problem for the U.S. banks as it is for the companies in China who are trying to list themselves and figure out how to interact with the government.
Sarah, we got time for just one brief question. It's got to be a 6 a.m. Bloomberg surveillance question. Can you own the banks? We've got bank earnings tomorrow. They represent so much of the American political and financial system. Can you acquire shares of banks?
I think that you can. I mean, this goes back to that whole argument between value and growth, and still the financial stocks are not particularly expensive. I think the recent drop in the yield curve has made that more of a tough decision, but I still think that going forward, you are going to see growth because you've changed the way a lot of those banks are making money, and they're making it more on fees than they are on your traditional spread between loans and their income. And so I think that you can own the banks here, and I think that you've got some runway ahead of you where as long as the economy continues to do fairly well, I think those bank earnings are going to be good. You're going to lap a very difficult quarter last year. So I'm not sure that second quarter this year is going to be indicative of the rest of the year going forward. But I think that you are starting to see some of the earnings power in those banks, and they do not look expensive on that basis.